All right. Hey, everyone. Mark here, Mark Pre-Markets. Thanks for joining me for another Bitcoin video analysis here. Today is Monday. And if you're new to my streams, I stream this every Monday. The goal here is for you to be prepared and to be more objective and to have a plan for levels that you can anticipate. So here's what we're gonna do. We're gonna look at Bitcoin, right? I'm going to evaluate Bitcoin. We're gonna update, talk about things that I had mentioned in my article that I wrote yesterday over at TradingView. Hopefully you checked that out. And then I'm going to answer your questions, okay, about stocks or altcoins or anything like that. So if you have a question about a stock or an altcoin, please share it in the chat now. Here, let me pull this chat over here so I can see what's going on here on TradingView. I am following house rules, of course. So just be aware of that. So let's get this thing started, okay? Also, if you'd like to share what city or what country you are from, that's always a fun fact. Now, let me see here. It looks like my TradingView, I'm not seeing anything there. So let me know, TradingView people. There it is. Okay. Look, sometimes the connection isn't that great. So I don't know what the story is with that, but I can't see any errors on my part. All right, so let's get this thing started. All right. By the way, this should only be about an hour. Sometimes I go a little over, but my goal is to make this whole video an hour. All right. So let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now let me take that slide off and you can see me and you can see my chart. Let me just make an adjustment here. So I want to just say hello to a few people. Let me see what we got. We got in the chats here. We got Thomas, good to see you. Travel, hey, Wedge, Mr. Plow, Gotham, hey, Peter, all right. Got our regulars. We got Dan, hey, SD Trader, good to see you. Armand, Will Reese from London, right? From London, because every time someone says their name is Reese, I think they're from Australia. Anyway, all right. Oh, what happened to my charts? Hold on a second. Where'd they go? What's going on here? Sorry about that. All right. And I pressed the wrong button or something. How annoying is that? All right. Anyway. Okay. So again, TradingView people, if you want to put your question in the chat now, again, for what stock or what market you want to hear. And, on the YouTube here, also let me know what you want to see and we'll get to it. Now, today is Monday, and you know what that means, right? That means I usually go over the economic calendar. Here's what I'm doing. I go over the economic calendar now on my own time, so I don't have to waste time here talking about it, because most of the events on the economic calendar, even when you filter it to the more important ones, most of them are not very relevant, and they're not really big market movers, right? So what I'm going to do is go over it on my own, like I have, and I'm going to point out anything that's worth keeping an eye on for the week. And in this week, we have only one report really that you want to keep an eye on, and that's the CPI report, which comes out here. It's a US CPI, Consumer Price Index, which comes out on Wednesday, which is the 11th. Usually that comes around 9:30 a.m. Eastern time. You're going to have to double check on the calendar. TradingView has its own economic calendar. I like to look at another one. It doesn't matter which one you use. Just make sure that you're aware. All the rest of the events that I saw this week were not that important. When you look at the economic calendar, you want to make sure you're looking for things like Fed Chairman Powell testifying. You want to see if there are any FOMC meetings or something like NFP. All right, CPI is important only because inflation is like the big deal right now. So that's why that you can get a movement out of that report. Otherwise, that's all you're looking for. Things like the ECB president speaking or whatever, it's not going to really be a big mover per se for the entire, for the global markets, because the ECB doesn't control the world reserve currency. The US does. So Powell is in control of the currency of the world, basically, right? The world reserve currency, and he controls the effects of inflation that can affect the entire world. So that's why it's so important. Anyway, so that's the only thing that we have coming out worthwhile, to keep an eye on this week. Again, why do we look at these numbers? Because you want to be able to mitigate risk. That should be your number one objective, not chasing profits, especially in this environment. Okay, this is an environment to be more defensive than ever. We're defensive to begin with in good environments. you have to be even more defensive, all right? And just focus on protecting capital. That should be your number one priority. I know no one wants to hear that, okay? Everyone wants to just show me how to make money. Just show me how to make money. That's what everyone wants to hear. I understand. But if you can't manage risk, it doesn't matter if you make money, because number one, you're going to make the money randomly. And number two, because you don't manage risk, you're going to give it back plus more. So it doesn't matter. You're just wasting your time. Does that make sense? I'm unpopular because I tell reality. I don't feed people false hope. And there is so much of that. That's my people saying here they want to hear my rant for today. And that's my rant. There's two things that I notice fake gurus do. All right. Now, fake gurus are an integral part of this game. Why? Why fake gurus? Because they stimulate activity, right? They're just basically an amplifier for the herd mentality. The fake guru has an incentive to be a fake guru and just give nonsense information because they can get paid if they have a nice large following and they can just say whatever, right? So one of the techniques, I was watching a couple the other day, and one of the techniques I noticed that's very popular amongst fake gurus, especially the bigger ones, is they like to glorify useless information. Like they'll take facts, like factual information, and they'll make it sound a lot more important than it is. Okay. It's like I'm listening to this and I'm like, how does this information help me make a better decision? Well, you know, if you look at this and this means this, and it's probably bullish for the market. So I'm very optimistic about this. So they're interpreting useless information that basically gives you a sense of hope. Stop getting sucked into that. Stop being, lured into that nonsense. Stop listening to people. Most people in this business don't know what they're talking about, especially if they're like on YouTube or on TikTok or whatever. They don't know what they're talking about, but they have an incentive to promote useless information. Okay. They get paid very well to do it. So like I tell people, you can be a fake guru. It's a good business, but, and they look like a genius in a random way. So sometimes, this is a long, and it happens to go their way. It's random. The other thing that I need to say is they push hope a lot, the message of hope, okay, a false sense of confidence. Stop listening to people. Focus on the market. Focus on price. Now, if you read my analysis that I put out yesterday on TradingView, all right, the title of it says 30K on the table, Bitcoin, 30K on the table. Now, here we are at 30K, right? What's the price right now? 38.72, okay? This was yesterday while Bitcoin was at 34 something, and I put 30K on the table. Now, I had no idea Bitcoin would get here in one day. I figured by Thursday, maybe. I mean, what do I know? I don't know when it's going to get there. All I knew was the probability was there because we cleared 35 like it wasn't even there. All right. So that's meaningful information. I don't get my information. Let me watch this fake guru and I'll just copy him. I don't get my information that way. The market tells me what to think. I follow the market. I follow prices. Now, charts can only give us so much information, right? I would say 95% of what's on a chart is useless. I will say that. And I'm a chartered market technician. Okay. I spent a long time and a lot of money getting that professional designation to become an expert at charting. And I can tell you 95% of it is useless. It's not going to help you time the markets any better. There's no advantage to using it. So there is some information that is useful on a chart. And that's the information I look at. Now, people think, is it something like volume analysis or some other kind of fancy nonsense complex? No, less is more, okay? I look at very simple information, but I know how to put it into context. And that's, I see a question here, how do you find trade ideas, right? Can you share your strategy on screening trade ideas? So see, that's the question. Can you share your strategy for screening trades? I can't share that here. For one, I'm on TradingView, so I have to follow house rules because I don't share that information for free. So that's all I can say about it. But I do have a process of screening for trades. But again, I can't talk much about that. It's a good question, though. My point is this: stop listening to people, okay, and start listening to price. The market does not lie. The market offers information. You have to know how to be objective about it. All right. So with that being said, let's talk about Bitcoin right now, and then I'm going to get to your questions because again, I want to spend more time on your questions. Look at Bitcoin. I mean, everything is red, of course, as you can see here. Now, how many people got sucked in or lured into the hope part of this? How many people? Because some fake guru, hey, Bitcoin's going to be at 100,000. Does anyone remember back in December or January how quickly these gurus like to remove that information? People were saying, oh, Bitcoin will be at 100,000 by February. Let's see, it's May and we're at 30K. Okay, so what does that tell you? There's so much evidence of that, but people like to forget. You know why? Hope is a very powerful emotion and people would rather have hope. So people would rather listen to some fake on TikTok than me giving them realistic and objective information that can actually help them mitigate risk. No one wants to hear about that. It's unsexy. Risk, who wants to hear about risk? I want to make money, right? That's what everyone thinks. You have to stop thinking that way. You have to separate yourself from the herd. Right now in this situation, you're going to hear all kinds of nonsense, right? With Bitcoin pushing 30K, you're going to hear the optimistic bulls coming out and saying, well, you know, if you were buying at 40K, now is an even better price. Just keep buying. I told you, if you've been reading my analysis over the previous month, just look at the titles on TradingView. Just look at the titles. My previous week, right? I put, what was it? Bitcoin 36, what was it? Well, I can't even remember the title, but it was bearish. Bears in control. That was it. See, I'm trying to remember without having to look. Bears in control. You know, the one before that was like tough time to be bullish or tough time for longs or whatever. I've been bearish. I also talked, there was one, you know, 35K completion of impulse, 35K. That's when Bitcoin was fooling around up in here somewhere in the 40s, okay, or whatever, the high 30s. I was focused on 35K. Again, where do I get that from? I just look at this chart right here, and it tells you all of that. Now, so let's go over that, all right? First of all, the structure has been bearish for some time. That's a lower high relative to the bigger picture. Usually, lower lows follow. Now, on this magnitude, they're not going to follow right away. They can take weeks. And look, here we are. It took weeks, right? But the big level for me was 35K because that was the level that's been in play going back to what, March and February, even January or whatever. That's the level that's defined this structure, okay? This structure, which I'm going to call, you know, like a lower high consolidation, because that's what it was. There was a range low, there was a range high. So it was a consolidation, not anymore, because now we've broken out of it. Clearly, that's a decisive break. All right. Unless we get a very strong bullish candle tomorrow and we're at 38K by Friday, this is a decisive break. So we have to see how this goes. Now, again, everything that I do or everything that I think, it's flexible with the market. I don't have a strict opinion. Now, so let's talk about a couple of things. All right, here's what I want to point out. In my analysis, I mentioned over the previous week, I mentioned 36K was a level, right? A support, a weekly support. In my TradingView articles, I'm going to include a support and resistance now. If you're not following me on there, you should. A weekly support and resistance, which will change every week. Now, that my support I had anticipated around 36K, okay, right around there. And as you can see, when we got there, what if people read the article, I said, I will be looking for reversal on the long side, right? Because I don't short Bitcoin. If I'm going to short something, there are plenty of other markets to short, as you can see. I'm only interested in longs. So if I'm going to go long Bitcoin, for one, I want to see 36K. For two, I need to see confirmation. I need to see the setup and confirmation because I'm not going to step in front of this, right? I warned people, do not step in front of this because you can get stuck in this. I know because I've been stuck in these situations. So I know the environment's not favorable. The environment supports a break of 35K. And I have mentioned that specifically. So anyway, we have that now. My point is this. We never got the setup, okay? We got a couple of pin bars. See, like these little pin bars in here. But the pin bar is only half the story. We never got the actual confirmation. So I'm not going to buy just because a pin bar appears. So I never sent anything out on that. I was watching carefully because this could have turned into a buy signal. But the point of having rules is to help you avoid this that we're in now. All right, because all you need to do is get caught one time in this and your account is wiped out. Trust me, I know. All right, now, so 36K was cleared and 35K was cleared like it wasn't even there. That was yesterday, right? Because when I turned this thing on, I'm like, man, we're at 34K. So cleared, right? So here we are, 30K. Like I said, I had no idea that we'd get there so quickly. In my analysis yesterday, I mentioned 32K. Actually, 32, I think it was 32.4, okay, which was here, 32.4, something like that. And that was the next support that I was looking for. The resistance was at 36 something, right? I think 36.6 or something like that, right? So these are the lines that you'll see if you go to my chart. Here, I'm just going to redraw the lines so you can see where they are, right? So right around there. Those are the support, the weekly support and resistance levels that I had mentioned in my analysis. Now, we cleared 32. Again, not even there. Not even a hesitation, not even a pin bar, nothing. It just cleared it, right? So brings us to 30K. Now, with those supports cleared, I mean, there's nothing for me to do. I'm not going to step in front of this now. A lot of people are going to say, oh, it's oversold. How much lower can it go? I'll show you how much lower it can go. Let's take a look at a weekly chart. All right. So here we are on the weekly. Now we're testing these old weekly lows that go back 1 year. Okay. So people go, hey, there's a bottom here, blah, blah, blah. There might be, but there's no confirmation. So here's the thing. As far as longs go, I want to be extremely selective. I'm interested in going long at 30K, but not like this. This is a lot of momentum. It can clear it, right? So I need to be extremely selective. Maybe I'll even let the thing give me an initial leg higher and look for the higher low. There's nothing wrong with being selective and missing moves because there's nothing to miss in this environment. We're not in a speculative environment. The type of environment that we're in is bad for speculative assets like Bitcoin. That's what we're seeing here and all the garbage altcoins that are right behind it. Okay. I warned people about those. So I don't mean to be yelling here, but so here's this level here. Now, bears are going to be, you're going to hear from both sides, right? The nonsense, the mindless bulls are going to say, oh, it's a long, it's a long. Oh, it's a double bottom. You have to buy here. Not in front of this, okay? Because there's a good chance that it breaks. If it breaks, right, you're looking at the next support on this thing. Let's see. If it clears 30K decisively, meaning we see 28K or something like that, let's see where the next support is. Now, I'm looking at a weekly chart here. So the next relevant support, well, it's probably going to be higher than this, but based on this chart, here, let's go back a bit. Based on this chart, you're looking at 14K, okay? Now, I think that's a little bit of a dramatic move. That's the price, what the price structure says. Now, again, that's not very realistic. All right. So while I will take note of that in this type of situation, so what do? How do I anticipate supports if 30K is cleared? Well, for one, I can measure, I'm not going to do it here, but I can measure this move from this low to this high, and it's going to give me some kind of proportional number in here somewhere. I can just tell you that. Okay. So you probably figure 25K, definitely 20K is going to be a psychological support. So those are the levels that you need to keep an eye on. Now, will we get there? Will we get to 20K over the next day or two? That's a little much, I think, as well. You have to be realistic and objective. You're going to have people exaggerated and excited on both sides. Keep in mind, a lot of people are probably stuck. Okay, so there's going to be a lot of emotion. There's going to be a lot of margin calls, all that other stuff. Don't listen to people. So here's what I'm going to give you now basically are the facts that you need to be objective about. We're at 30K. 30K is a psychological support. It is a potential area for aggressive swing trade longs. Shorting into this is high risk. While yes, the general environment is favorable for shorts, short squeezes can happen and they're very sharp and painful, especially if you short into the bottom. Okay, so I don't know if this is the bottom, but there's a very strong likelihood that you can get a squeeze, and a squeeze can easily be 1,000 points, easily, when you have a move like this. So it's about the risk. It's not about the reward. Would I short this if this was the S&P? No, I wouldn't short at these levels. I want to see a resistance level. So right now, based on the analysis that I have done previously, right now, the level that I'm looking at is that 36, was it 36.6? That's the resistance. So I'm just going to draw the line there again. That's the resistance. So if I was going to short Bitcoin, which I'm not, this would be the area that I'd be looking at, okay? Not the low. So it's important to have this plan in advance. Will Bitcoin work its way back up there? I don't know, right? That's what everyone wants to know. Tell us where it's going to go next, right? Like Seinfeld. Tell us where it's going to go next. I have to do Seinfeld impressions. And I don't know where it's going to go next. Like I said, don't try to figure out point B, right? Don't try to figure out point B could be up here. Point B could be much lower. You want to let the market figure out point B. And when it gets there, then you have something to do. In fact, maybe we can even call that point C, right? So maybe, point A is where we are now. Point B could be the next support, which is, possibly 30K. Point C could be the next resistance. The market has to choose one of these levels, all right? It may blow through the level, like I've seen here just a couple of times. It can blow through the level, but those are your potential levels where something can happen, right? Where we can anticipate some type of activity. Now, on the long side, you can get a short squeeze here. So I'm open to an aggressive swing trade long. It's aggressive because I'd be going against the momentum, but I need to see a lot of confirmation. There's no way I'm stepping in front of this, right? Because I could have said the same story that I just told you. I could have told you that at 36K and be like, oh yeah, I'm just going to buy into it because the RSI says it's oversold on my 30-minute chart. So yeah, I'm going to buy it. Okay, there was no reason to buy at 36K. All right, although it was a level to potentially anticipate. Do you understand what I'm getting at here? So you want to be prepared. That's part of the preparation. So now I'm prepared for a buy signal in this area. If this area is cleared, I'm going to be looking at the 25, 26K area, and we'll see what the market wants to do there, unless it provides some new information that I can then measure risk from, okay? But right now, I can't do anything with this. Does that make sense? So those are the two areas to really be prepared for. If you want to go short, this is a tough spot because you're running the risk of being squeezed. If you want to go long, it's too early because this thing may continue. So again, the risk is too high on both sides. The general environment, right? Especially take a look at the S&P. We're below 4,000 or almost. I mean, the S&P is minus 116 points today. How many times have I been telling people that Bitcoin is following the S&P, right? Have you seen some of these other markets? It's nuts, but it wasn't unexpected. So anyway, so that's my Bitcoin analysis. Now, real quick, I want to show you, all right, and then I'm going to get to your questions. I mean, this is what you should be paying attention to. I talk about it all the time. No one wants to hear it. This is the bond market, okay? This is the 10-year note. Been talking about this for months and months and months. Now, it's been making lower lows. Today, you have another green candle. So people say, oh, look, is the bond market reversing? Is that a trend reversal? No, it's coming off of a lower low. The structure still has lower highs all over the place. So it's going to take some time for that to stabilize. Perhaps this is the beginning of it, but anyone that has that optimistic talk, like, well, the Fed is done raising, they've overdone it, blah, 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 blah. It's all nonsense. The bond market will tell you the reality, all right? And right now, all this says is, okay, perhaps it's exhausted from continuing to push these lows. Perhaps it's temporarily oversold, but there's no evidence here of a trend reversal, meaning we're going to get some kind of bond rally just because, oh, how much lower can the bonds go? I mean, what are they going to do? Go to zero? Here's the weekly on the bonds. This is my gauge, right? So this is going to tell me when speculative money is likely to come back to the market, and there's nothing here, okay? There's no stability here. One green candle is meaningless, on this bigger picture. So those are the things I wanted to point out. And I hope that clears up a lot of perspective and questions that you may be wondering. All right, so let's get to the questions portion here because I talk too much. All right, and I'm going to start here. Let me take a look at TradingView because I see a bunch of questions here. Hey, TradingView people, good to see you. All right, so I got Freeloader. All right, Sky. Hey, Byte Federal. Hey, what's up, you guys? Good to see you guys. All right, got a bunch of people here. Just Simone. Uh, I apologize if I get your name wrong. I can't see. All right. Anyway, so let me jump across here. Let me see what we have going on. All right. So Tarek from Chicago. Oh, cool. All right. Some more Chicago people. So let me see what Byte Federal has to say. What do you think about Bitcoin daily RSI? Oh, I don't know. Are you joking? Let me see about the Bitcoin RSI 14 being this low. All right, now I guess it's a serious question. So I don't follow the RSI for. Let me put Bitcoin back up here. I don't follow the RSI, especially on these time frames. It can serve a purpose on smaller time frames, but it's really more for gauging momentum. The fact that the RSI is probably in oversold territory doesn't mean anything. It just means that momentum is very bearish and that it can continue to get oversold. So something like that, people are going to make that mistake of just stepping in front of it because the RSI is oversold. Don't go by that. Okay, we need to reach a level first. The RSI is not going to tell you a level in advance. You can get that from a chart, okay, and predetermine a level in advance. And then by the time that buying activity develops, I mean, who knows what the RSI will be doing, but it's probably not going to give you a buy signal until there's a significant rally in progress. So don't rely on the RSI, all right? Momentum is bearish. So if anything, look for sell signals on it. Do not look for buy signals in this type of situation. In order to get a sell signal on the RSI, you're going to need that thing to rally up a bit and then turn again, right? Or if you use the CCI or whatever oscillator you use, you should be looking for sell signals, perhaps on smaller time frames. Okay, some hints there. All right, anyway, but good question. Let me start. So let me jump over to the other chat. So now, the question from Thomas, right? Yeah, I answered that question. Screening for trades, and I can't talk about that here. So thoughts on ARK, ARKK. So look, something like ARK, when the Nasdaq gets hammered, this thing is gonna be hammered. All right, no surprise there. I mean, it's all tech stocks and whatever. And I'm telling you, I'm not impressed with ARK and all that. I'm not impressed at all. I think it's just a trap for retail traders, to be honest with you. All right. I mean, yeah, right. She happened to have some good stocks but at the bottom of the 2016 market, and she looks like a genius, but I'm not impressed. This thing is vulnerable to the S&P and NASDAQ. So a question on something like this, you should be looking at the NASDAQ, not really this, because whatever the NASDAQ does, this is going to do. So let's just take a quick look. This is the weekly chart, right? Now, I mean, look at the lower highs and lower lows. The midterm trend here is bearish, okay? I'm sure if I zoom out further, right, the long-term trend, it's testing some old resistance levels. You see this way back here? Actually, it broke them. There's no reason to go long this, especially this, because it focuses on like high growth stocks, right? This is not a conservative ETF at all, right? I don't think Walmart is part of this ETF. Anyway, so does that make sense? Stay away from high growth stocks. This thing is full of them, right? ARK Innovation ETF. Yeah, thanks a lot. Innovation. These things are getting hammered because they're high growth. High growth will not do well in rising rates. So when the bond market stabilizes, you're likely to see some stability here. All right, and perhaps the stock market will show some stability first, but most likely you'll see it in the bonds. The stock market's going to be all over the place. And when the bonds stabilize, which again may take weeks or months. Now, people don't like when I say that. And that's why I don't have much of a following, because I provide no hope. People, weeks or months, I want to hear it's going to turn around tomorrow. I'm not following this guy. Let me go find a fake guru on TikTok. He'll make me feel much better. All right. So yeah, just keep that in mind. This is definitely not a defensive play. Does that make sense in this environment until rates start to stabilize? Yeah, so nothing good here. Stocks in general are a bad idea. I've been warning about stocks going back to November, December when the S&P was pushing highs. I was saying, stay away from stocks. This is not a time to invest. Now that we're at lower prices, you would think I'd be time to buy some stocks, but not until rates start to stabilize. Now, as far as inventory goes, inventory is something that you buy all the time, right? But it's the sizing that really is how you control your risk. So if you're taking small bites, like if you're interested in ARK, you're taking small bites, like perhaps you have $10,000 to invest and you're buying a couple of $100 once a month. Okay, you're building inventory during a weak time. All right, so you're just going to get better and better prices. The mistake you want to avoid is getting caught with something too large, right? Size that's too large, and this thing can, sell off much further, right? The NASDAQ and S&P basically have just gotten started, right? Let me show you. Let me show you real quick here. Hold on, this thing's giving me a hard time. NSX, right? Take a look at this. That's the NASDAQ. So ARK is going to follow this thing, right? This thing just broke some major supports. Let's take a look at the S&P real quick, right? You want to talk about stocks? Major support broken. All right. Want to take a look at the weekly? This is where the S&P is. It's got a lot of room to sell. There's a lot of room there. All right. Which means there's plenty of better prices. I'm saying I don't want to talk about this in absolutes. I don't want to make it sound like this is a guarantee, but the potential of this thing testing, what is this level here? 3388. Okay. Right now we're at 4,000. 3388 is another 700 points on the S&P. That's a lot of money, okay, for something like this. So keep that in mind, that vulnerability is there. The potential is there. All right. Now, the probability of it getting to that price is another story. I don't know, the probability of getting to that price. There can be other factors that come along during the year that change the perception of the market. Perhaps we get, some sort of changes in legislature or changes in the administration that can change the perception of the market. But right now, there's no such catalyst. Just keep in mind, a bullish catalyst can come along. That's why you can't sit there and look at a chart and say, okay, a year from now, it's going to be here, because things change and you have to be open to that. All right, so good question. Let's move along here. No one will really need Bitcoin for anything useful. Just like, okay, really me. Dutch tulips can be bought much cheaper nowadays. Yeah, I mean that's funny that you bring up the Dutch tulips. In fact, I think I remember you, really me. You used to give me a hard time a few years ago. I have a good memory, but anyway, it's good to see you here. Now, Dutch tulips, I used to compare NFTs to those, because I mean, Dutch tulips are pretty much like, worthless, and so are NFTs. But NFTs were a product of too much money floating around. People that were going to spend $40,000 on a worthless graphic, you have to be out of your mind, or it's an effect of inflation, right? So that's basically how I viewed those. So thanks for bringing that up. All right, hey, cool, good to see you. I've been hearing this tulip statement since BTC has retraced from thousands back to 500. Doesn't get old. Yeah, well, I mean, I guess it's classic, right? Everyone should be familiar with that, the tulip bulbs, because that's a classic example of the herd mentality. And as you can see, it's part of human nature. It took place, what was that, 15th or 16th century, and it still takes place today, just in probably more exaggerated forms, since information moves so fast. All right, so let's see here. Wedge, okay, got you from Smyrna Beach. All right, yeah, that sounds nice. Okay, let me see what we got here. From the Bay Area, hey, Gotham, good to see you. Peter, market getting interesting. Would you say that any bear market could be more volatile than this? Well, this is really not that big of a deal, to be honest with you. I mean, this is normal, all right? This is really not that wild yet. This is just normal. So I don't know. I really can't answer that question. Anything can happen. There's a lot of vulnerability that's possible. Keep an eye on things like the VIX, because the VIX will give you an idea. Everything is relative, right? So, a bear market today may be greater in magnitude than we saw in recent years, because we haven't seen a heavy duty bear market in quite some time. Okay. I mean, I can't remember like a significant one since like the year 2000, around that time when we had the tech bubble situation. I can't remember one since that time, all right, because the Fed has intervened. They've pumped money. They've printed all kinds of money. You had that 2008 situation, Fed pumping money all over the place. So they just kind of covered things up, right? So the market just kind of gets just kind of lulled to sleep with that, and they don't understand what a real bear market is like. I think it's, there's nothing wrong with market movements, higher or lower. It's just how long will it go on for? And how long is going to be a function of what the Fed decides to do. This is the Federal Reserve's party. Okay. They're no longer behind the stock market. They're no longer supporting it like they were a couple of years ago. That party's over. At some point, the cycle will change, and they're going to say, "Oh, we're going to start lowering rates," and all that other nonsense, right? They'll start talking about it first. The bond market will price it in probably before they start talking about it. But that's where the game begins, is with the Federal Reserve. So that's who you want to keep an eye on. Okay. Anyway, so good question. Okay, Dan. It's okay. Good to see you. Hello, Stian. Good to see you. All right. Oh, Armand, Cape Town, South Africa. All right. Welcome. Okay. But usually, okay. Hey, no problem. Will, thank you for as much as I do. I only share once a week. There are guys that share like every day, and I'd love to be able to do that, but I just can't. But thank you though. I appreciate that. All right, cool. Alex, I've been waiting for these levels to buy some inventory. I'm still afraid to buy alts. Alts are, let's take a look at some. Okay. GMT, which is an alt that I've been watching recently because of this bullish movement, right? And a number of people in my streams have brought up GMT. So I said, okay, maybe this will be like a good trade of the week or something, right? So I'll keep an eye on GMT, and maybe I can make a call on this. Well, we had that bullish structure, but as I see Bitcoin break and break and break, I don't know about this thing, right? I'm not going to touch a garbage altcoin, a speculative altcoin, if the mother of coins, Bitcoin, is breaking supports. I mean, there's going to be nothing behind this. Look where we are, right? All the altcoins are going to look like this. Let's take a look at some of the other popular coins. XMR recently, right? XMR. Hey, should we buy XMR? No, you shouldn't buy XMR. All right, look at this. Right? These recent rallies get everyone all excited. You see that? And look where it goes. Again, Bitcoin never signaled a time to really start getting into these, right? Bitcoin is the leader. Let me see. Do I have a better chart on this? Let me see something here. XMR, USD. Let me see. Binance, maybe? No, it's the same. Okay. But you understand my point, right? Don't get fooled by moves like this if the environment is not supportive of the move. Those moves, this is a weekly chart, those moves are very tricky, and people react to them. You'll see all kinds of fake gurus pointing out, Monero is going to be at 100,000 by next week because my RSI said so. Yeah, something like that. I'm going to glorify some more useless facts right now. Anyway, look at these things. How about another one? DOT. Remember DOT? Oh, DOT is going to be the next big thing. Not exactly. How about another one? How about Link? Remember Link? Another one in the toilet. Okay, so I told people, stay away from these garbage coins. But look at this rally, right? So there was that rally in there, and it sucked a lot of people in. This again, fake gurus pumping this stuff, the coin developers themselves pumping this stuff, and someone gets stuck in this, right? Who? The retail investor who doesn't know any better and gives in to the illusion of being informed because they consume garbage information, which is most information on the internet. If it's free, chances are it's useless. Okay. I try to provide some real value here. Yes, this is free, but I make every effort not to provide garbage. I want you to have information that's going to at least help you make better decisions in terms of managing your risk. All right. So anyway, that's that. Let's move along here. Thank you for your views. Regarding the current environment, would you rather advise to sell and wait or keep assets and buy more? Okay, so as far as dollar cost average, that's a good question. That's going to depend on how much risk tolerance you have, right? I mean, look, we're at low prices. Forget altcoins. First of all, forget altcoins. If you're going to invest, right, stick with a leader. Bitcoin, where's this thing? Is this thing, okay, it hasn't broken 30 yet, but stick with the leaders. Again, have a plan and you buy small. Now, when we were at 60K, I want to bring this up. If you go back to previous videos, right, because I don't remove my videos, they're all there. If you want to go back, all right, a few months when Bitcoin was at 60K, and people would ask me, well, what should I do? Should I buy? I'll say, look, if you want to invest, invest small because we're at highs. If Bitcoin gets cut in half, you won't be exposed. And here we are. Bitcoin is cut in half. It's about the risk, okay? But back then, people were saying Bitcoin was going to go to 100,000 and that you're missing out. And that investors are going to make, no, early investors are going to make billions of dollars, right? Because these things are going to 10x and 50x. Do you all remember that? If you don't, go back, unless they've removed the videos, those titles were everywhere. I was seeing Bitcoin billboards in my town, Bitcoin billboards telling you to buy Bitcoin. If there's never, if there's any type of sign of a top, that's the sign. If it gets onto a billboard, right? Or if you see it like on advertisements, like in the subway, you know, during the subway stations or whatever in there, that's a sign of the top. If it reaches, you know, the mainstream people like that, right? So anyway, my point is this. As far as investing goes, hey, there's never a bad time to invest. You have to believe in the product, but this environment, better prices are likely to follow. So you don't want to invest aggressively. There's no reason to go all in. All right. So you have your preset allocation. Like, let's say, you know, again, you want to invest $10,000 and you're going to start now. Okay. So once a month, you invest $100, right? So if this thing goes to 20K in the next couple of months, you're not going to be anywhere near overly exposed. And you shouldn't use leverage. Okay. When it comes to investing, you should be at 1-to-1. You should not use leverage because leverage exposes you to more risk. People, yeah, but I make more money. Right. But what if Bitcoin goes to 10K? I mean, anything is possible, right? You have to be open to it. The probability is low, but it can happen. So, you know, how would you feel if you threw 50K in the market and you watch it go to 20K? You're not going to be happy, right? Also, when you get overexposed, it makes you a weak hand and you're more likely to make irrational decisions, right? You don't want to be making irrational decisions. The market does that for you. You want to make rational decisions. And one way to do that is to be a strong hand and be able to view information objectively, right? And having a focus on risk and being defensive. That is how you make more rational choices. Who cares if you miss moves, right? You're going to miss moves anyway. You're going to miss moves all the time. It's a matter of how much risk are you willing to take. So in these situations, some people are going, oh, I'm just going to buy into this. Very risky thing to do. You're better off going small. So to answer your question, as far as buying into, you know, investing, whatever, pick high quality stocks that at least pay you to hold them. Or if you're going to buy into something like Bitcoin, small. There's no reason to skew larger until we see some sort of stability somewhere, right? Then it's okay to skew larger. Let's take a look at real quick. Walmart, right? Now, Walmart recently it was more of like a defensive play. I've heard talk that, you know, a lot of funds were buying into Walmart because it was a safer play compared to the tech stocks and blah, blah, blah. In case the market pulls back, Walmart won't pull back as badly. Well, I mean, look, Walmart's still in a decent area, right? So if you're investing in stuff, I mean, you want to pick relatively stronger stocks. I'm not telling you to invest in Walmart, but I'm just giving you an example of, you know, that stock is acting relatively strong for whatever reason. Okay. It doesn't matter why. It just matters that it is. People always want to know why. Who cares why? All right. It's relatively strong. The NASDAQ is and S&P are breaking supports, and this thing is trying to make a higher low, right? That's a good sign. Okay. So if the S&P and NASDAQ get it together and find some stability, something like Walmart is likely to outperform. Does that make sense? Okay. So let's move along. That's a good question. Okay. XMR. So I went over XMR. I beat you to it. Let me see what else we got here. All right. So, hey, Adnan from Switzerland. Hey, welcome. I don't get too many people from Switzerland here. All right. Welcome. Can you look at MHK? Sure. MHK. All right. So MHK is Mohawk. I think Stian has brought this one up recently. Now look, you have this interesting move, okay, and it's not selling off. This is the weekly chart, generally strong, right? Recently has pulled back. Possibly, if you want to look at the wave counts, I always talk about, Elliott wave only when it's clear. And something like this structure here, this is a clear wave 4, and it hasn't overlapped the wave 1, right? Wave 1 being the top over here. It just barely touched it, right? About that border right there. So this is possibly a leg 1 of a 5, but I don't know what they do or why they would be, counter the market or an attractive defensive play relative to the S&P. But the chart says that it's showing some kind of strength here. All right. So in this situation, what do? Well, you might as well wait for some kind of pullback and see if you get one. You have a gap in this area right there. See this price gap? That can act as a support. So that might be a good area to be looking for a swing trade long, or if you're trying to build some inventory in this, perhaps you take a small bite now and see if it gives you some better prices. But again, with inventory, it's really more about time than it is about price, right? You're buying at any price. So for the swing trade, it's more about the price structure and waiting for confirmation and all that other stuff. Also, you're managing your risk not in the same way. Does that make sense compared to an investment or inventory? So in a situation like this, you can wait for that pullback, perhaps a test of the low. But right now, at this moment, I mean, look, it's trying to pull back with today's weak market. This thing is minus $1.92, right, at 147.84, but it's not getting hammered, right, which means there is some relative strength there. So this would be a decent one for a potential long idea for a swing trade. Again, this is the daily chart. So you'd want to start to see these daily highs get taken out. It would be nice if the S&P found support and the S&P gave you a rally as well. That's when this thing should shine. That's when this thing should somewhat outperform. Does that make sense? Okay. As far as resistance levels go for something like this, just look at the recent structure. Right now, look, you're coming off this old support. So you may get that higher low. This old support is now a resistance, right? So that would be a potential profit level. Also, you have this level way up here, okay? Those are your levels that you're eyeing and you're gauging your potential based on. Does that make sense? So that's Mohawk. Again, thank you for bringing this up. People have been bringing this one up in recent weeks, so it's good. You guys are keeping an eye on this stuff. All right, so thanks for mentioning. Let's see what else we got. Okay, waves. All right, Sirhan, let's see. Wave, that's another garbage coin, right? That has recently in the spot. Look at this. Yeah, I've checked waves a few times because I remember people had brought up waves in my streams here when waves was doing this. I'm like, okay, all right, we'll see where this one goes, right? I'm going to keep an eye on it in case it gave some kind of buy signal or something, because again, I'm not going to as pessimistic. I shouldn't say pessimistic, but as what's the word I'm looking for? Not careful. I can't think of the word right now, but when I'm looking at something like this, it's like, all right, I know chances are this thing's going to pull back, but I will still have an open mind and see if perhaps we get a higher low somewhere and maybe a new buy signal of some kind that maybe I can mention, right? Well, anyway, never got anything like that. And this thing gave it all back, okay? So again, that when I see that, a nice strong structure and it's all given back, for one, that's a sign of pure hype. Okay, and pure nonsense, and that this is probably hyped in some chat room somewhere, and a lot of people are stuck in it. Number one. Number two, yeah, look, it's trying with this little nonsense here, right? Potential high or low, but this is meaningless. This is meaningless in light of what Bitcoin is doing. So I wouldn't go near this. This probably, if this coin depends on hype, which is what this tells me, then there's no recovery here. Okay, unless they're going to start hyping it again and everyone believes it, but you're going to need a very specific catalyst, and you're going to need some support from Bitcoin, because look, Bitcoin is breaking, and I mean, you're getting a bearish pin bar right now. You can't really make anything out of that. I wouldn't really make a big deal out of this either way, but I would just look at it this way. You have a lower high established right there. So as long as price stays below that, 1698 basically, as long as price stays below that, chances are this thing's going nowhere. Perhaps you'll get a range bound market, but As long as this environment does not favor speculative assets, I would anticipate support breaks. Okay. So watch that. What is this? $12 level, just below $12. Watch that. If that breaks, you're just going to make lower lows most likely. And the environment supports that. So I don't know if you're in it, if you're stuck in this thing, but if it breaks 12, you're probably looking at 9 or 9.5, because that's where the next support is, right? Based on this chart here. And the environment, like I said, supports bearish activity, not bullish. So if you have any hope, or if people are pumping you full of hope, saying, well, this thing is going to go back to, what's the high here? 50, no, the high is, it's going to go back to 63 by next month. You'll see. Right. Yeah, right. Yeah, okay. Keep in mind, none of these guys have CMTs, right? And one of the important things about, I'm just going to mention this, having a CMT, one of the important things about it is we have to follow a code of conduct as being a CMT. Fake gurus don't have to follow any code of conduct or nothing. So following the code of conduct means I can't make stuff up like, hey guys, buy Waves because Waves is going to be at 100 by next week. I can't say that. Even if I wanted to say it, it's unreasonable. I can't say that, right? Because I have to follow a code of ethics, basically, that prevents me from saying, unless I want to throw my CMT out the window. But I spent a lot of time and a lot of money on getting that professional designation. So I'm incentivized not to do that. Same with other CMTs. Does that make sense? So when you're listening to someone who does not have a professional designation, or someone that's just, they talk a good talk, but they're not an industry professional at all, they're just some guy who's interested in stocks and maybe a little further ahead than you, then you're just listening to nonsense. Just want to point that out. All right. And there's plenty of those people. All right. Let's move along here. I'm ranting all over the place. Okay. So that was Waves. That's your best asset. You say how it is. Well, Armin, I appreciate that, but a lot of people don't. Okay. A lot of people would rather have me lie to them and feed them hope. Now, people that appreciate me are people that have had some experience and have gotten hammered and realize that the market is not as easy as many make it sound out to be. And then they realize, oh, this guy is realistic and objective. I could use some of that. Yeah. After you make the mistakes. But a beginner will not appreciate that. Right? A beginner is only in this, right? They only want to hear the positive things and the nonsense and the lies. And that's what they go after first. It's human nature. I can't change that. And I'm not going to change I'm not going to start lying. I'm not going to become a fake guru and start doing what they do, even though it would probably be more beneficial for me. I'm not going to do that because it's not me. Either way, even if I don't have the CMT, I still wouldn't do it. All right. Anyway. Hey, Kim from Argentina. Hey, welcome. I've seen you before. With his negative realistic vision about the market, saved more than one person from. All right, cool. All right, saved more than one person today from bankruptcy. I hope so, right? Because I hope to make people more objective and more risk sensitive, right? So that you're more defensive. Again, this industry is here to rob you, okay? Not for you to make money. And it's set up in such a way that, they stimulate fees out of you. It could be an exchange, it could be a broker, it could be a Forex dealer, it could be an educator, it could be all kinds of stuff. But, software providers, they want fees from you, okay? Doesn't matter how you perform. That's the way this industry is set up. So it's important to understand that. A lot of people don't care because they're only thinking from an egocentric point of view. Oh, I could figure things out. I'm going to make money. It's just a matter of pressing a button randomly. But you can also go to a casino. You can also flip a coin and get the same result. All right. Instead of learning how candlesticks work. Anyway, let me see what else we got here. Gold. Luthando wants to see gold, XAU, USD. Let's go there. Okay. Gold is something I watch very carefully. Gold is going to obviously be pressured by the dollar. Whenever you look at gold, take a look at the dollar index. Look at the dollar index. If TradingView will ever show it. Let's see. Why is TradingView taking so long? There we go. Look at the dollar index. Kramer, look at the dollar index. So higher highs, barely, but still higher highs on the dollar index, right? This is a reflection of rising rates. No surprises here. What's the high in the dollar today? 104.18. This puts pressure on everything. There's no reversal in trend here. and it's going to take some time for this thing to reverse, right? Anyway, so I bring up the dollar because you should look at that whenever dealing with gold. Dollar, strong dollar, is going to put pressure on gold. Don't believe the gold fake gurus and all the conspiracy theory people. Oh, the Fed's going to print money forever and gold's going to go to 5,000. The Fed is not printing money right now. Okay, so gold is not going higher anytime soon with a dollar looking like that. All right, I don't care if it's a dollar against a basket of other currencies. It's still the dollar and it's still the world reserve currency. Gold is not. So gold has a sell signal in it. First of all, we have a lower high right here. Okay, and the break of this previous candle, 1866. What are we at? 1853 right now. Man. So there was a sell signal there, and it's trying to break this low here. What is that? 1850. So no reason to go long gold. Gold has a lower high in place, right? This area here is a lower high. A lower low is likely to follow. Now, sure, the dollar can pull back a bit, right? The dollar is coming off highs. Maybe you see a little range bound situation in gold, possible, but would not go long. This is not the environment for long gold. So watch for the lower low. Now, what do? Should you short the break? Risky, just like shorting the bottom in Bitcoin, right? Short squeeze is likely here. Perhaps we get a bullish pin bar over the next day or so, right in this area. A bullish pin bar would be a failed low. So you may see some type of short squeeze activity. So it's risky on both sides. Should you short into this? If you do, you need to stay on top of it. It may break. I mean, you may see gold at 1820. It's possible. But gold may also squeeze. So you have to babysit if you take that type of aggressive short right into the low like that. The more conservative thing to do on something like this is, again, wait for resistance. That may take a week. Look at this. Gold resistance is up in this area. So you're looking at 1890s again, all right? We just came off of that. So is gold going to go back up there? It might, but it doesn't matter if it's not about, again, trying to figure out what the next move is. It's being prepared for the following move. So if the following move of gold takes you back in this area, that's a place to consider shorts. If the following move shows a reversal somewhere in this area, right, which is very probable, then that could be a swing trade long, an aggressive one, because not only are you going against the gold structure, you're going against the dollar. Does that make sense? So that's gold. I mean, I'm definitely bearish on that structure, and I'm not going to have any other type of opinion on gold until the market environment changes. Gold is not something to be excited about. Does that make sense? Okay. So let me see what else you got here. All right, let me jump over to the other chat. Let me see what else. I know I'm getting tight on time here, but I want to try to answer as many questions as I can. So I appreciate everyone's questions. All right, 20K is unfilled gap too. Right. So I mean, again, Bitcoin 20K is a possibility. Glad you tell us stories of your experiences of these times. Smart to compare as well, since nothing has changed. Right. Right. Well, look, human nature doesn't change. Right. Technology changes. Technology has changed a lot in the previous 20 years, especially as far as how markets, microstructure of markets, but that doesn't change the herd mentality or human nature, okay? And as long as people still trade, now you can argue, well, robots don't succumb to human nature, they're robots, but someone has to program the robot, and that robot can lose money for someone, right? So the robot doesn't care about the money, but the programmer will care about the money, and they're going to make adjustments to the robot. Does that make sense? So human nature doesn't change. It's the way we are. It's the way we react to, because we are naturally wired. It's important to understand human psychology when it comes to markets. We are naturally wired to evaluate or process information from a physical environment. Think about it. We see things, we can touch things, we smell things, we can taste things, right? Those are all functions, or those are all aspects of a physical environment. The market is not a physical environment. The market is an abstract and random environment. Our physical environment is not exactly random. We can control things, right? If it rains, man has created shelter. Okay, so man can control his environment. We have some very nice shelters these days. We don't have just caves anymore. We have some nice homes. Okay, So if the weather's uncomfortable, we can make comfort, right? So man has some control over this, what basically, if you think about prehistoric man, was a very random environment, okay, but it was still physical. So man can still get by in that type of environment. Market's not physical. So you have to understand it's abstract. People still apply those physical ideas to a chart. A chart, you can't see what's going on behind a chart. You can't see the actual order flow. You can't see where those big limit orders are, or the rate of market orders coming into the market. You can't see those things. The broker can, Coinbase can, but they're not going to share that information with you because there's an advantage to knowing it. Okay. So you need to understand the abstract and random nature. You need to respect the random nature. And when you do that, it opens your mind to the reality and being more objective instead of reacting to things, which is what human nature programs us to do. That's why your typical trader doesn't make money. That's why your new trader that comes in, they make money randomly. They think they got this thing going. They don't realize that it's just random and that you can get the same result from flipping a coin. You have to have a statistical advantage, and it's very hard to come by. Okay. And you have to understand how all of that works. All right. Anyway, people like you will always scream when BTC retraces, when trying to validate your investment thesis that has kept you out of this asset that is proven to be the best investment. How long will you scream this, I wonder? Yeah, okay. I'm not screaming anything. Bitcoin, yeah, it's a great investment, but you're looking backwards, okay? Yeah, we can all say that about lots of things, looking backwards. Backwards doesn't count. It's about what's happening next and risk. All right. So, yeah, okay, whatever. Look, can't make everyone happy. But I don't know why you're wasting your time watching my stream then. Okay, that would be a speculative move. All right. For sure, this is major support. Okay. Hey, do you see any change in the bond? Nope, no change. Not yet. One, like I said before, one green candle does not count as a change. A change in the bond market can take weeks or months. You know, again, this guy giving me a hard time. I'm not screaming about anything, or I'm just telling you what I see in the market. Okay. And the market is what shapes my, if you want to call it an opinion. I don't really have an opinion. I let the market tell me what it wants to do, and then I evaluate risk. Okay. That's it. It's that simple. All right. Okay, so let's see. Hi, everyone. Gasoline. Kai wants to see gasoline. Let's see. Can I see that? Can I see gasoline? Let me see if I type that in. Okay. I guess this is gasoline futures right here. I can look at this one. Let's see. Oh, well, obviously, you know, with oil doing what it's doing. I mean, look at this. So actually, let's take a look at the weekly chart. That's a failed high. I mean, look at that move on gasoline. Interesting, right? You have a failed high up here where it just barely goes higher and it's turning. That's a weekly chart. So certainly not a place for a long. If anything, it's an aggressive short. Okay, but you are fighting the environment. So if you're going to short something like that, again, requires a lot of babysitting and watching. These are your support levels, $3.42. So yeah, something like that. But again, don't, you know, these are very aggressive if you do something like that. Because I mean, take a look at oil. Is oil doing the same thing? Or oil's pulling back a bit here, right? Now, oil, let's take a look at this. Oil was just at 110 USD, WTI. Oil was just at 110 like yesterday. Okay, oil's now at 102, interestingly enough, which keep in mind, the energy component of the S&P is a significant percentage. I think it's like 3 or 4% of the S&P. Don't quote me on that. I know I forget exactly what it is, but that can actually have an effect on the S&P, right? Anyway, interesting pullback on oil. So with gas coming off like that, yeah, I can see perhaps maybe an aggressive short, but this structure on oil is a bullish consolidation, even though we have this pullback. I'd be looking for longs on oil, not right now on this candle, but if this thing can find support, right? And I'm mentioning oil because it's going to affect gas. So 95.25 area, if you get some kind of reversal there, that would be a range low okay? Possible range, low, double bottom. And that's like in a wave 4 area, right? You could probably count the waves on this thing. I mean, those type of consolidations are typical of wave 4, and that would be a long. I'd be definitely interested in a long on something like that, okay? Now, oil is very geopolitical. It's very sensitive to stuff like that, so things can change quickly. But right now, that is what I'd be looking for, support for a long. This is an aggressive short, right? And obviously gas is following that. Does that make sense? So that's gasoline. Thank you for asking about gas. All right, let me see what else we got here. All right, the people are arguing here on TradingView, or it looks like they're having some kind of conflicting discussion of some kind. Some really do have world utility and say, I'm just looking at these. Okay. All right. Anyway, let me jump back because I can't read all that. I'll be here all day. All right, Kai, I hope that answers your question. Hey, Mark Chu from New Zealand. Hey, Mark Chu, I remember you. You're the guy that brought up the New Zealand dollar short, which I took and I got stopped out of. Not your fault. I liked the trade idea too, but it turned with the S&P. I remember that. I remember you because New Zealand, no one here, I usually don't get too many people from New Zealand. What is it, like 4 a.m. over there or something, or 5 a.m.? And that takes a lot of effort to listen to me at that time. Thank you. Hi, Ben from Toronto. Sure. How far do you think the bonds can go? Now, I don't know. Let's take a look at the bond market again real quick. How far can they go? All we can do is look at support and resistance levels, right? So I'm going to go to the weekly chart on the bonds. And again, let's zoom out because that is somewhat useful information on a chart, even though it's old information. It at least gives us an idea. That's where we are right now in the bonds, right? That's a support that goes all the way back to 2018, okay? Quite some time ago. Now, let's go back a little further. And I mean, look at that move. That's nuts, okay? So rates right now are where we were back in November of 2018. Let's look back and see where the next support level is on the bond market, because these are the levels. These are what help you prepare. So we have, let's see here, going back to 2008, is that 2008? Yeah, around there. Looks like, man, this is your next support right around there. I mean, you can argue that there's some in here somewhere. You can argue. Those are your next support levels on the bonds, okay? So if we clear this area, which is pretty significant right now, that's a pretty significant area. I mean, we're going back more than 10 years. Look at this. That's a significant area. Overlapping, going back to 2010. I was still bald back then, by the way. Okay, anyway, I just wanted to share that with you. Yeah, so if we clear this level now, those are your next levels, right? So what levels, what numbers are we talking about here? We're talking about 115, 115.24. What is this low here? 113. So those are the levels to keep an eye on. Now, this is a pretty significant level now, and perhaps that's why we're seeing the green candle. And maybe the bonds will stabilize off of this level over the next, few weeks or months, possibly, but it has yet to prove itself, right? So like I've been saying, there's no stability in sight. It doesn't mean stability won't develop over the next few months, but a lot of stuff has to happen, right? The perception of the Fed and Fed action needs to start changing. That's what, the bonds are pricing in 4 or 5 months ahead. That's what bonds do. That's what markets do. They're discounting mechanisms, right? So if something changes in the perception of the bonds, keep in mind, retail traders don't trade bonds. These are banks, these are institutions, these are large hedge funds. They usually have better information than everyone else. They usually can anticipate things based on other information better than everyone else, right? So we'll start to see the changes there. So we see the levels where the changes can occur, and we're at one of them. So we'll see if the changes actually start to develop. One green candle is too early to make that judgment. Does that make sense? So anyway, good question. All right, I'm over my time, but let me go a little further. So double bottom, maybe a reversal coming soon. Right, okay, so I covered that. So Sean, SPX, I went over the dollar. Okay, so he wants S&P. Let me just see what's going on here on TradingView. Okay, if you think, why are you listening to this stream? Curious. Okay, wait, are they fighting with Really Me again? Let me see. Yeah, Really Me, and he used to give me a hard time. Why does Mark have to imitate someone so funny, like a cheap stand-up? Oh, see, he is giving me a hard. He hasn't stopped giving me a hard time. This guy used to give me a hard time years ago. See, I have a good memory, and he's still here giving me a hard time. Unbelievable. Unbelievable. Yeah, he's you get these people, these internet people that have nothing else better to do, and they got to give me a hard time. I don't know why. All I try to do is help people. So yeah, I don't know why he's wasting his time, but clearly he doesn't have very good priorities. Are you probably referring to MicroStrategy's liquidation issues around price point? Okay. Are you seriously asking this? Okay. NASDAQ does not give a shit. Oh, sorry. He said it, not me. About Bitcoin, just like an elephant. Okay. No. Okay. Okay. Yeah. Okay. SARK, SARK. I may have to like report him to a moderator or something. Again, I remember that guy. Okay. Anyway, Tuttle Capital. Interesting. Let's take a look at the 1 week. Ooh. Yeah, so something like this. Interesting chart that you bring up, Freeloader. Nice looking chart. This is the weekly vertical. You can't touch this. I don't know what their story is. Can't touch this though. You're not going to buy this thing on highs. So on something like this, you put this on your radar, right? You say, okay, interesting. Stock market selling off. This thing is making higher highs. So maybe they're invested in energy, or who knows? I don't know what they're in. But short innovation ETF. Are they like the opposite of ARK? Maybe that's why it's vertical. I know there was someone that came up with an ETF that was like basically short Cathie Wood or something like that. Anyway, something like this. So you're going to need the stock market to rally a bit for this thing to pull back to a support. But again, you're playing the S&P here, right? Or you're playing the short innovation ETF. You're probably playing the NASDAQ. So this is basically you're long a short position in the NASDAQ. Buying this here would be equivalent to shorting the bottom, right? Shorting right into the low. So you don't want to do something like that. It's nice looking, but wait at least for one of these old resistance levels, which can act as a support, which will be a resistance on the NASDAQ. Does that make sense? So don't use this as your guide. Use the NASDAQ. That's going to be a better gauge for something like this, since it's going to be dependent on the NASDAQ. All right. Hey, pal. Hey, good to see you. Haven't seen you in a while. Are you a swing trade BTC buyer if candlestick reversal shows up? Well, so pal, to answer your question, I would like to be a buyer at the 30K area. I'm interested in buying at these levels, but I'm not going to just buy. I'm not going to just step in blindly. I need to see confirmation. I need to see setup. It would be nice to see some stability as well. It is aggressive. So, but I am open to the idea, if that makes sense. Okay, what is your view on Cardano? Oh, I haven't heard from Cardano in a while. ADA, USDT. All right, let's take a look. And this guy's got to give me a hard time on my Seinfeld impressions. Obviously, he doesn't like my Seinfeld impressions. It's okay. I need to work on them. I know. Cardano, this is not going to be any different than everything else, right? Let's take a look at a weekly. A lot of people got stuck in this one, right? A few weeks ago, months ago, Cardano was going to, I can't tell you how many videos I saw about Cardano going to 10X, going to 50X, all this other nonsense. And here we are. Okay, so Cardano is breaking these lows just like Bitcoin. Nothing to do here. I wouldn't be accumulating these. I'm sorry. I just wouldn't. I don't care how great their white paper is. It doesn't matter. If there's no money going into the entire sector, especially highly speculative assets like this or products, they're going to get hammered. So you're at these potential lows, right? So that's the only good thing I could say about them is at least you're not buying highs, but you're buying into an environment that is not likely to come back for you anytime soon. So, if you're a big believer in something like Cardano, I mean, this move looks exactly like the Bitcoin move, right? I mean, look at this. This represents like the 40K resistance, okay? And look where it is now. So what do you do with this? If you're stuck in this, I don't know what to tell you. I mean, I don't know what to tell you. What's the price of this thing now? 64 cents. This thing it's possible for this thing to keep going. If Bitcoin goes to 20K, where do you think this thing's going to go? So again, it's about how much risk you can tolerate. I certainly wouldn't be buying more. If you have your schedule of purchases, like you're accumulating some, well, then you stick to your schedule. but make sure that you don't get overweighted. Another thing is, you can always skip a month or something like that and wait until these things stabilize. But I am certainly not a fan of Cardano. I've never been a fan of these because I recognize the lack of value. Okay, but that's just my opinion. But anyway, so should I buy more Bitcoin or other coins now? Like I said, you're not buying lows. You're not buying highs, which is a positive, but you're buying into an environment that's not supportive. So you have to decide how much risk are you willing to take. Again, if you want to invest, small bites. Okay, if you have $10,000, $100, right? That's a tiny percent of $10,000. Okay, what is that? 1%. So, it gets you in, you're getting your small bites. You're going to start to average in at a decent price. If Bitcoin goes to 20K, you won't be overly exposed and you will have an opportunity to continue to buy more. Is Bitcoin going to go to 14K? I have no idea. You have to be open to the possibility of risk. Okay, that's the main thing here, risk and how much of it you can take. All right, let's see what's going on here with Really Me. Because honestly, I'm so curious why people keep pyramid scams and schemes. Okay, the truth about the product Bitcoin is not one. All right, I don't know who this guy. Okay, I don't know if he's like criticizing me. I'm confused. I thought he was like being nice to me earlier. If he's giving you a hard time, people, just report him. The moderators will take care of him. Why NFTs and many altcoins do not hold structural value that will keep them relative to BTC. Some altcoins are project network, which, all right, well, they're getting into this, but it already has a network of usage. They get into all this fancy talk of this technical. It doesn't mean anything. Okay, it doesn't mean anything. It's all a perception of and the availability of speculative money. Speculative money comes from the Federal Reserve. When they lower rates, everyone has extra money. They throw it into things. Speculative assets. That's why we saw these bubbles in the NFT world, and these garbage altcoins. They have no value. It's just people have a perceived value. They buy into the hype, and that's what you get the herd mentality from, right? That's the process. It doesn't matter how technical or advanced and all this other nonsense they are. It doesn't mean anything. Follow price. What's your turn on defensive? What's your turn on defensive industry stocks? Are you referring? I don't know what you're referring to. Are you talking about like defense industry stocks that make like stuff for like armies and stuff? My opinions don't matter, but my opinion on that is simply it's a result of the geopolitical situation. So they're going to be hot momentarily, and then once that thing cools off, you're going to deal with that, right? So I don't like those. I'm not into unless you're like going to day trade them or you're going to swing trade them, and you're not going to have long-term exposure to them. Then you could work with something like that. But I like to avoid those flavor of the moment type of situations because they can be very erratic. And do very dramatic things, right? And I'd rather, like you may be looking at a support on a pullback and look, okay, it's a support. But since it was all hot air to begin with, that support is cleared with no problem, right? That kind of thing. So they're much less reliable, in my opinion, unless you're on smaller time frames, like I said, and you're just grabbing what you can. But long term, no way. I don't know enough about them really. I just group them with all the other stocks, and if the S&P is selling off, eventually it's going to catch up to them. Right. So, all right. So Sean, SPX. So Sean, I went over that quick, but look, SPX USD. These things are right now. We're at look at that, $39.99. The market closed $39.99. How nice, market makers. So we're on that low right there. That's pretty significant. Like I said, perhaps we get a bounce tomorrow, but there's really, like I showed before on the weekly, there's really not too many supports. Going forward, you have one here at 39.40, which is not too far away, but that's what you're looking at with something like that. This structure breaking is pretty significant. Okay, and we shouldn't be surprised in this rising rate environment. We should not be surprised. A lot of these stocks that were driving the S&P were overinflated to begin with. Okay, with hype and inflated inflation money, easy money. So I hope that answers your question. I got to wrap this up here in a couple of minutes. So let me just see what's going on here. Some really do have real world utility and say and save world. Okay. I recommend to invest very seriously in real economy that creates value. Oh, maybe he's Warren Buffett. Warren Buffett's been pretty upset recently, about the stock market stuff. If you're confused by MSCI World, all right. I'm not sure where this guy stands. I'm not sure if he's criticizing me or what. Inflation are both high. Shouldn't they be opposite of each other? No. Well, here's the thing, Nima. The dollar is now basically setting up to fight inflation. It's not a one-to-one relationship. Inflation is high because those are the effects that we're still feeling from all the easy money that we've had over the previous 2 years. Now, with the rates rising as they are and the dollar now strengthening, it's going to take some time to pull that inflation back, right? It's not going to be like, okay, dollar's higher, no more inflation. It's not like that because the effects are in play, right? These things take time to develop. So that now that the Fed is in position to fight, which is what they're doing, they're fighting inflation, right? They raised rates. The bond market is ahead of the Fed, right? Rates are rising. This will eat into inflation over time, but you have to give it at least 6 months. All right. So don't be confused by that. Understand, you have to understand how markets work that way. It's not like a one-to-one thing. Okay. So I hope that answers your question. Pound dollar. All right, Jude. Hey, Jude, I remember you. Haven't seen you in a while. Oh, look at this guy. I like your name. I'm not going to repeat your name, but thank you for the 100 coins. I appreciate that. Okay. With your bad name there. I don't have to erase that. I try to keep things clean here, but it's okay. Look, that's your name. TradingView lets you use it. Hey, whatever, man. Okay, cool. Thank you. All right, pound dollar. Well, look, pound's gotten hammered, right? Euro's gotten hammered. Again, function of strong dollar. This is the pound on the weekly. Look where we are. Now, again, with something like this, it's going to be tempting to go long because, the dollar has to pull back and blah, blah, blah. But you're fighting this bigger picture. I would rather look for shorts at a resistance level. I mean, I'd rather do that. If you're on smaller time frames with the pound and you want to try to go for that long, again, you're going to have to babysit that and you're going to have to be on top of it, right? Because the momentum, you're fighting this momentum, okay? Let's look at the resistance levels on the pound. So you have a resistance level right there. You have a resistance. I guess you can argue that there's one there, right? And you have one here. So those would be the areas to start looking for shorts on the pound if price can get back there. That's the way you have to look at it. So you have like basically a resistance zone here, and then you can look up in this area here. If price can't get there, perhaps it gives you another little mini lower high, and you want to take something like that. But just don't get too expectant, meaning don't think, oh, the pound is going to go to $1.15 and I'm going to hold it. If you take a short sooner than one of those resistance levels, just look at your risk. If you're risking 150 pips or 200 pips, which is typical on something like the pound, and you can make 150 pips, start looking to take profit off the table. Maybe if you have a couple of lots or a couple of micro lots, whatever it is, start taking them off, right? At 1-to-1, 1.5-to-1, 2-to-1, take your money off the table in this environment because things can change quickly, right? Or the dollar can happen. And since you're at pretty low levels to begin with, you don't want to get caught in some kind of irrational squeeze, which can be very painful. All right. So I hope that answers your question. Okay. Let's see. Put your savings. So this guy is just hammering Bitcoin. Okay. Let me see. Where am I here? Okay. I went over that already. Okay. Okay. Hold on. Just catching up. I'm going to wrap up this in just a few minutes. I just see so many questions. And I'm still trying to figure out if this guy's giving me a hard time. Thanks for your content. Much appreciated. Okay, euro. So what I just went over in the pound, okay, with your wrong predictions, who's he saying? I hope he's not talking about me because I'm not predicting anything. Hey, Alice, what's your thoughts on LMT? LMT? Oh, is that the defensive industry stuff? Yeah. Again, flavor of the month or flavor of the week, right? Anyway, that's a bullish consolidation, if anything, right? Similar to the oil situation, look for a range low if you're interested in something like this. But like I said, if things cool off in the geopolitical tension area, you know what I'm talking about. If things cool off, these things are probably gonna, they're not gonna be as eventful, if you know what I'm saying. So with any type of flavor of the week type of thing, I think it's better to think more short term, like day trade or swing trade. Does that make sense? And work with it that way. All right. So I'm going to try to make these quick because I want to wrap this up. Okay. I hope this guy's not talking about me. All right. Let's see. Really, I mean, let me know if you're talking about me. Thanks for your content. Much appreciated. Okay. Euro. So Euro is pretty much going to be the story with pound. Investments about ability to predict it, you'll be proven wrong. That is the nature of the market. Oh, okay. Another sleepwalker who thinks that he has a situation figured out. Okay, he is. Okay, you know what? Hold on a second here. Yeah. Okay, this guy hasn't changed. All right, dude. Seriously. Okay, this guy hasn't changed. What an unprofessional. You know, why does this guy have to ruin my stream? I'm going to make sure this guy doesn't come back to my stream. Because I don't appreciate that. I put a lot of work into this, and he's calling me a sleepwalker. I don't pretend to have this figured out at all. I'm just helping people prepare. Okay. Anyway, yeah, I see that now. I can see that. That's all right. It's okay because I've reported him before to moderators, so they'll be familiar with him. Anyway, hey Scott, good to see you. All right, let me see what else we got here. You always. Okay. So, Shashank, I always predict. Well, no, you know what it is? I'm not predicting anything, right? He says I predict before and then it occurs. I'm basically, what I'm doing is I'm gauging probabilities. That's what I'm doing. And the market might agree, right? The market may actually do what it looks like it's setting up to do, or it may not. I'm just gauging those probabilities. And if the market gives me, right, that support that I'm looking for, or the market goes where I'm measuring the probability from, then it gives me an opportunity to measure risk. That's what I'm looking at. Once I have that opportunity to measure risk, that's all I'm interested in. So like I said, I'm not pretending to have everything figured out. I'm managing risk. That's what I'm doing. And I'm hoping that others can also get a good gauge on how to manage risk, because that's really what this game is all about. Okay. In your view, are the markets today acting similar to 2008? I don't really believe that. 2008 was a completely different situation. All right, right now we're reacting to inflation. 2008 was a fundamental problem with housing and loans, right? So that was a completely different situation. And the Fed, of course, had to step in and save everything. How? By basically what? Printing money and rescuing those banks that were overly exposed and all other stuff, which basically is like printing money, right? And protecting those large banks. So it's not the same situation. It's not the same situation. It's still a situation though. Okay, don't compare. Things will be wild for their own reasons. Don't compare back to 2008 in terms of that. We have different drivers, different catalysts this time. It's not the same. Okay. Always seemed very angry. Yeah, that's a good way to describe it. I don't know. I guess you could say that, Kai. From Estonia, you have talked about some small private group. Okay. Is there another batch? Okay. Mario. Yeah. I can't talk about that here, but not right now. Joel, can you look at, okay. All right. So here's the thing. What time is it? Yeah, I got to wrap this up. I've wanted to do this for an hour and I'm over talking. Okay. Thank you. Okay. No problem. No problem, you guys. All right, you guys. So look, you know what? If I missed your question, I apologize. I do this every Monday. So you can come back and ask the question again. I had to skip through a bunch of questions, I know. So again, I'm sorry. I like to try to answer everyone's questions. What about gold? Yeah, I went over gold. Would you be good? No, I talked about that. You can go back in the stream. How do you apply Elliott waves? Okay, I'm not going to talk about that. Luna. Okay, again, I have to wrap this up. So again, cynical, Will, that's the word, cynical. That was so long ago. Cynical was the word I was looking for. Thank you. All right. So anyway, you guys, thank you all for spending some time with me here today. I don't appreciate that guy giving me a hard time over on TradingView, but I will let TradingView know because they usually don't appreciate things like that either. Okay. So anyway, if anyone else wants to say anything about that, if he made you feel, if he took away from the quality of your experience in the stream, hey, say something about it. That's all I'm going to say. All right. So you guys, again, thank you all for taking the time with me here today. I hope you got something out of this stream. Again, my goal is for you to be prepared. Okay. I want you to be prepared. I want you to have a realistic view of the market. I don't want you to feel anxious. I don't want you to feel like you're missing out on something and that you need to do something right now because you're going to miss this, you're going to miss that. You're not missing anything. Focus on price. Stop consuming hope, okay, and learn to be objective. Price and price information that we can pull from the chart helps us to be objective. But the goal of being objective is not to make money, it's to manage risk, okay? So if you know how to define risk really well and you know how to manage it, the byproduct of that is typically a profitable experience, right? Now, I'm not going to sit here and promise you're going to make millions of dollars, but you are less likely to get caught in these high risk situations, and you're more likely to retain profits that you make from profitable trades, whether you generate them randomly or not. Okay. And that's the whole idea, risk management, like a poker player. Poker players have to deal with risk all the time. Okay. In an environment that's pretty random. The cards are random. Okay. Yeah, they can gauge probabilities, but their skill is deceiving other players and managing their money so that they can keep more of their winnings, right? It's the same idea here in the market, except, we're not dealing with the psychological aspect like we are in poker. We're not deceiving anyone. We instead have to be more sensitive to the herd mentality and how we behave within that mentality. And we need to be able to separate ourselves from that, right? That's the market aspect where you have to have some sort of, what's the word I'm looking for? Some sort of process or some sort of structure to do that, right? To be objective. But risk management is risk management, and controlling your behavior is something else, right? You can have all the risk management in the world, but if you can't prevent yourself from buying into something because you can't control your urge, that's something else, right? And I can't help you with that. All right, anyway. Okay, you guys. Okay, no problem, no problem. I hope you found it helpful. Again, that's what I want you to come away with. I stream every Monday at 3 p.m. Eastern time. I want you to know that. So if I missed your question again, you can come back at that time and ask me next week again. All right. So again, thank you all for being part of my stream. Gambling sent me 100 coins. Thank you, Gambling. Now that I mentioned poker. All right. Nice name. Anyway, appreciate the coins. Thank you. You don't have to send those to me, but I appreciate that. Anyway, you guys, so wherever you are in the world, enjoy the rest of your day, the rest of your evening. And thank you very much for watching.